Good morning and welcome everyone to the Trading Success Blueprint, the Beginners Online Trading webinar. My name is Danny and I will give you the webinar today. It's also important to know that any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, recommendation, or suggestion. All right, so everything seems okay and we can safely hit the road. All right, we have a nice notepad here for the notes. So as I said, we are going to open the webinar with an introduction to the company, AvaTrade. As you know, we are founded on 2006 and we have an I license worldwide. To access our customer service in case you got any question or a query is just by clicking here at the bottom left. As you can see, you can chat with us or you can do it through the WhatsApp, whatever you prefer. And if you have a question related to trading, you can ask your senior account manager, which I'm going to write down here as well. Now, the email that I wrote here is for people that are not using the WebTrader, okay? This platform is called the WebTrader. Okay, something is open here as well. All right, this is called the WebTrader. Okay, and we have it. This is the desktop version, obviously, but we also have it in the app. It's called the trading app, AvaTrade trading app. Okay, and if you're not using this interface, obviously you're not going to be able to access the chat the way that I showed. So you can just send an email to customer service at avatrade.com. Okay, that's related to customer service, as we said. Senior account manager is taking care of the trading side, which means everything under that umbrella, from basic calculations to questions regarding analysis, risk money management, strategy, basically everything you can think about trading. A senior account manager is usually a trader, so he can give you the inputs. All right, now let's carry on with this interface. Just before that, I would like to write down just a few more platforms that we have, just for you guys to know. Those platforms are not, just a second, they're not something I would like to waste our time on. Okay, this is a different concept of options. I'm just writing it down for people to know that we have it in case somebody wants to trade options. MT4 and MT5, again, I'm not going to explain about them. Okay, just know that we have them as well. And AvaSocial is something we would like to say a few words about, since something called copy trading is now very popular. Okay, so what you can do with AvaSocial is two main functions. You can either follow or copy. Now, follow means when you download the app, you get access to choose which trader to follow or copy, all right? And you have a button which you can click, and it gives you the interface looks a bit different, but the idea here is very easy to understand. You can either follow or copy. When you're following someone, you're going to get notifications with his positions, the positions he took, and you can execute them on the spot, just like a signal. Okay, or you can keep it in your sheets, or you can just do analysis with them. And the point here is you're getting the information that the trader, the positions that the trader is taking, but it's not executing anything automatically. Okay, it's just information. Copy from the other end is what I said, plus the positions will be executed automatically. So follow, we're getting notifications with the positions. We can take them or not. We can execute them or not. Copy means that it executed automatically. Now, the good thing about AvaSocial is that you don't only copy a trader by the exact same numbers. You can, if you want, you can copy a trader exactly as they are, or you have a chance to proportionally customize the lot size. Okay, so for instance, my balance currently is $10,000. Let's suppose I'm copying somebody with 10 times more, or even 20 times more. Okay, 200,000 in balance. Okay, naturally the positions that he's gonna take might not, my account might not be able to handle. Therefore, what I can do is I can choose a lower lot size in advance. And as I'm copying that trader, he's going to continue doing what he's doing, and I'm going to take considerably lower lot size. Okay, it's a bit difficult. It might be difficult to understand what I'm explaining. Just download the app, explore it by yourself. But it was important for me to give you guys the idea of how it works. And yeah, this is a great app. You can enjoy that. It's free to download, so just go ahead and try. We would like to carry on with this interface. We're going to talk a little bit about the features that it offers. And to begin with, let's have a look at our signal section, okay? So to the left, there are lots of interesting things in here. This is just personal information, trade, positions, order, history, and right underneath we have the signal section. The way that this works is predetermined analysis, not produced by AvaTrade. This is not AvaTrade signals, is Trading Central. So if I click here on view signal and I'm clicking on this I, it's going to fall down and shows me the Trading Central explanation. Right here, I can see support and resistance. This is a signal that is no longer viable. As it's written here, the market has already reached a key level, right? We'll understand in a minute why it's not valid, and we will understand why it's missing here something called take profit and stop loss. Okay, but most of the signals, valid signals, they don't look like that. They look like this, okay, with take profit and stop loss. Okay, it doesn't matter if it's a sell or a buy. As you can see here, there are some buys, valid, sell, okay. And when you click on the signal, it shows you if the signal is valid or not. Now, what does that mean, a signal that is valid or not valid? Those signals are produced on a certain price. That means that those numbers here, this analysis here, is based upon a certain price, a certain scenario. Okay, whether if it's a buy or a sell. Now, as you can see, oh, this one is not valid as well. Okay, let's carry on. Carry on. We have to refresh. Sometimes to refresh, go down a bit. Okay, as you can see, this one is valid. All right, we have NASDAQ here. So if we take NASDAQ and we expand the chart a little bit, and we can see here certain levels, as I have explained. Okay, we see that the levels expected to get hasn't matched, right? Is it possible to change the screen color to make the site white? Unfortunately, I'm not familiar with changing the colors for the layout. Okay, but I will check. Thank you for your wonderful question. Okay, as I was about to say, as you can see, the levels here still hasn't met. This is why this signal is still viable. If I'm opening another signal like this as an example, as you can see, the numbers here has already passed. It already passed the scenario. That means that the analysis that was done here was already fulfilled, whether with a buy or a sell scenario. That means that a signal has a certain time duration, time validation until it gets to the scenario, and then obviously it stops being valid. Okay? And that means automatically what happens when I choose a signal, let's take a healthy one, let's take that one, okay, as an example, let's suppose that this is a buy scenario. In a minute, I'm going to show you how to match the lines and how to make it a bit more to make sense, right? And not just blindly click here, sell or buy, but to place some things on the chart and then make a bit more sense matching the picture here. Okay, now let's suppose that we go with a buy. Obviously with a buy, just to clarify something quickly, as this is a webinar for beginners, when we are buying something, our intention is that the value of our instrument will go higher. When we are selling, our intention is that the value of our instrument will go lower. Therefore, when I'm taking a buy position and my intention is that the value will get higher, what I can do is I can place something called take profit, which is a pending order. It's an automatic waiting order that once it gets to the level that described in here, let's push it up a little bit. Also, don't worry guys, as I have explained, I'm going to show you in a minute what I'm doing and why I'm doing, but right now I'm just placing it for you guys to see it visibly. Okay, and if it gets funky and it doesn't want to land on a specific price, we can just customize and click save. Now, so what does that mean, this scenario in here? It means if it gets to the upper line, I'm gonna make 600. If it gets down to the bottom line, I'm gonna lose 1,600. Okay, I don't have to be a genius to understand the ratio here is not optimal. Okay, let's put it this way. So of course I can play with it, and I can again I can modify that to make a bit more sense. Okay, we are with the buy. Doesn't let me place the dot here. Okay, so let's just take that. Okay. Anyway, the point here is that I can customize the prices for the take profit and stop loss, so it would make a bit more sense. But then, of course, the signal is there is no really point relying on that scenario. So in this case, what I would like to do is to do this test before I'm clicking here buy or sell. And again, the same idea with the take profit is I've explained. If I'm taking a buy, I can place a pending order that will close it automatically when reaching the price. The same idea for the stop loss. What the stop loss allows you to do is to close the position automatically if it reaches the price at the bottom. Okay, if it gets to here, it's going to stop it with a loss. If it gets to here, it's going to stop it with a profit. In this scenario, we can make 600 or lose 700. Okay, the closer I am to the entry, the less I can lose. But just a second. Okay, there is of course a minimum. There is a minimum distance that I can pick between my entry to the stop loss, and that's usually what the platforms is offering us. As you can see, that's the bare minimum that I can place. Okay, never mind. I don't want to confuse anyone. The idea here is that we can place take profit to close it automatically with a profit, stop loss to close it automatically with a loss. In a buy scenario, the take profit will be higher. In a sell scenario, it will be lower. Now, how does the signal, there is a question here, why make the possible loss too high? Want to make their higher stop loss and take profit? Yeah, that's exactly what I was talking about. This is why we have two scenarios. So if I took the buy scenario, it doesn't make any sense. So let's click on the sell scenario, and then in a sell scenario, it's the other way around, right? It placed it the other way around. Okay, I've done a little too fast. Let me try and do it again. Okay, we'll go again. So this is NASDAQ. I'm clicking on view signal, expanding the chart. Next thing that I would like to do is match the validity. As you saw here, it was 1 minute, and in 1 minute we don't get the levels in here. So we're going to match it to 1 day. In 1 day, I can place the lines similarly to what we have here. We have access to those levels. So we have 2,300, and then we have 20,200, which is roughly here in the middle. And then we have 19,860, which is roughly here. And then we have another one, 19,770. Now, when I'm looking at this analysis, and I am thinking of which scenario to go with, okay, then I can decide. And if I saw that the buy scenario doesn't make any sense, and I explored the sell scenario, we saw that the buy scenario, we could lose 600, or we could lose 1,600 or gain 700. Okay, that doesn't make a lot of sense in terms of ratio. So we can try the sell scenario instead. And in the sell scenario, the numbers will be the other way around, which makes much more sense in terms of R&R, risk-reward ratio. Okay, now this is entirely up for you guys to decide how to use the signal and when to use the signal and how often and so on. But the preparations that I showed you now is something that I highly recommend, and not just to go blindly with the signals. Of course, you can, I want you guys to understand how simple that is. 1 click, 2 clicks, 3 clicks, and we can launch the signal. Okay, however, I highly recommend to understand just basically how everything works, and then you can carry on with ease, knowing if the signal is needs to be modified or not. And of course, we have to pay attention to when the signal was produced. Of course, if I'm taking a signal from a few hours ago, as you can see, then I'm not going to be surprised if the scenarios are close to the end, right? And then, of course, if they've already passed, we're going to get a nice message like in here that it's already passed, right? Yeah. All right. Let's carry on. Do we have any questions regarding the signals beside Regina? Which thank you by the way for the question. Thank you very much. Anybody else would like to share with us a question or something that doesn't make sense before we move on? Do you use the signal? Phil, thank you for the question, Phil. I use the signals sometimes, but mostly 99.99% of the time. I'd like to have analysis regardless, doing analysis regardless. Garrett, do you have a minute? Favorite indicator to lay on the charts? Okay, we're gonna look at that. Dina, how did you get those purple lines there? Oh, right, yeah. The lines are from here. Super simple. You just click and place wherever you want. There are 2 ways to move the lines up and down. One of them is to click and drag, which, as you saw, sometimes the lines can get very funky next to the exact price. As you can see, if I'm trying to land it on a specific pip, not always it's going to let me, right? It's going to mess around. So the other way to move around those lines is basically just clicking on it. When the coordinates open, you just place the price that you want. You can change the color here as well, and then you click save, and it's going to go straight to where you placed, right? I hope it makes sense. Why do you use for? Let's not delay about that. But if Dina, you can remind me that in 10 minutes, I'd really appreciate it. But then now I want to first finish the first segment. Let's get rid of that for now. Okay, and underneath we have here the news section. So we saw technical analysis, signals, very nice, very accessible. Okay, now we have the other side, fundamental analysis. So just for you guys to really understand the basics here, we have technical analysis, fundamental, and what I was taught about trading. Technical analysis would probably be the how things are moving. Fundamental is probably the why things are moving, right? Some people can go outrageous and disagree, but that's my point of view. Okay, technical analysis will be averages, numbers, statistics, certain levels, certain valuations and fluctuations. Fundamental analysis will be news, articles, everything around the world that has an impact on the market. Doesn't matter if it's small or big. We're going to have a look at the economic calendar and we'll understand that different events has different impact on the how massive the fluctuations can be and can correlate with other instruments and contracts. Okay, we'll get there. We'll get there. All right. What I wanted to show you now is super simple. We have here the news section. So in here as well, we can filter, go by forex, stocks, commodities, indices, or cryptos. Let's suppose we would like to focus on commodities for now. When I'm clicking on it, it's going to open a nice article, pre-European market brief. Okay, if I scroll down, I can enjoy that. That's from the Trading Central as well. And here at the bottom, it's showing me the related instruments, which I find super useful. The reason is, this can imply that it might have an impact on those instruments. So by reading this article here, which could probably take me half a minute or a little more than that, I can have some nice nice hint for those instruments as a result from what I'm reading here. Just a moment, guys. All right, so this is regarding, as we said, fundamental analysis. We have other articles here as well, but we're not getting into that now. Let's carry on in here. We have discovery, analysis, views. We have some nice ideas of how certain scenarios that we can, again, similarly to the signals, maybe a bit different, the context is a bit different, but also this is analysis views. Nice ideas for analysis. In here, you can pick an instrument. We're going to give it a minute. Let's see. There we go. Okay, we can click. It was a bit too fast, right? Let's go back. Okay, we can see by mentions what's more popular and worth following. Let's suppose. So this is in the center, we have NVIDIA. Right to the right, we have Apple. Left, Microsoft, Tesla, and so on and so on. We have here as well. And when I'm clicking, let's click on Microsoft just for now. We can see the mentions, and we can see the revenue estimation, and we can see the acquisition interest, and the partnership. And the beauty about that is that if I would like to focus on articles that the mention was about the revenue, I can click. You see it marks the box here. I click, and it's going to fall down the articles related to that. So I can just focus myself and my time to those articles reading about that specifically. Okay, and in here it's going to show you the difference the stocks has been through, and you can take it to the charts. And I think personally, I like that section very much. I think it's very useful. Okay, let's move on. I don't think we should delay on that too much, and I also want to have a minute with the economic calendar to show you guys. Okay, that's under discovery as well, economic calendar. Now, the way that this calendar works is super simple. We can filter here as well. We can filter by the date. So let's suppose we would like to see only dates from 25th till the, let's say, 2nd, right? So roughly a week. And we're not interested. Okay, we're filtered for US. We're removing that. All right, so let's suppose we're not interested in all the what we have here. Okay, we would like to specifically have only events for the yen and for the pound. Okay. And we can see by clicking on the two boxes, you see now it's marked. We can see that now there are only events for the yen and the pound, Japan and United Kingdom, right? So if we also would like to filter the impact, let's suppose we don't want to see all this small impact events. We only want to analyze high impact. So I'm clicking here on the eye and I basically narrow down, okay, specifically to see events only for the upcoming week, specifically for the yen and the pound, but we don't have anything for the pound in this range and under the high definition. If we turn it off, we do get events for the pound. But if we're only going for the high impact, which are high importance events, we see that the yen have some, but the pound doesn't. Okay. All right. Another thing that we can have in here is to search for a particular event. Okay, if we would like to focus on the right, not now. Let's enable everything. Okay, so by clicking here on all countries, basically enabling all the countries. Okay, and if I'm looking for something specific, it's going to show me only the mortgage, mortgage articles related, events related, right? And then I can take it from there. There is a question here in the economic calendar. What do the actual forecast previous columns represent? All right, so this is an excellent question. Thank you, Garrett. Okay, what that means is super simple, and thank you for reminding me, is just the results and the what we're expecting to happen in the upcoming event. Now, the actual, as you can see, if something is grayish like that, and we have an actual, that means that it's already passed. Actual is the actual result. Obviously, we're not going to have an actual result until the event take place. Okay, so the actual is the actual result. We're only going to have it on events that already happened. Forecast is usually based on certain statistics that we anticipate a certain. Just a second, guys. I want to bring up an event that has a forecast. All right, and let's take that as an example. So we see the previous result, right? This is the previous result, sometimes revised. And we have the forecast, which is again what we are expecting to happen. And the actual, as you can see here, is missing. Why is it missing? Because it didn't happen yet. This event here hasn't happened yet. Now, how does this, what exactly should we expect out of the numbers here? Obviously, because this is a positive, not necessarily a positive event, but what this report means is all the new jobs applied to US besides the oh, there is a comment here that the voice is distorted. I hope that my voice is still okay. Oh, that's all right, guys, I hope that the voice is back. As I was about to say, the event in here, the report in here, is all the new jobs applied to US beside agriculture's fields. As this is what's called a non-farming non-farming payroll. Okay, non-farming payroll. So beside agriculture, those are the new jobs applied, and of course, the higher the number, the better it is for the dollar and for the economy, as the cycle of the economy naturally carry on. Okay, the more people are working, more taxes flowing, money is circling, and so on. The lower the number is, it could show a negative effect on the dollar, and you can see. Okay, I don't want to get into that, but you guys understood the idea. You can filter almost everything in here, and that's super comfortable. The only thing I would like to say about that before we move on is this tiny box here, which is at the calendar. Now, I understand that people can be busy during the week and they don't have necessarily the time to sit by the TV or follow the events. And this is an amazing, amazing solution. You can just place that in your calendar. You don't even have to open TV. You can quickly open the event, see the results, go to the market. In here, you have all kind of buttons here. See the impact, volatility, the charts, super, super comfortable. I don't want to delay about it too much because I would like to give you guys something practical to begin with. So let's finish that segment and carry on with ease. We can officially begin the second segment by picking ourselves a nice, excuse me guys, just a minute. All right, guys, we are back. Oh, there is still comments that my voice is distorted, but it seems like the rest of the audience replied that the voice is okay. So I think whoever get my voice distorted, just check the settings or maybe your device. It might be on your end. All right, let's begin the second part. As I said, we are going to pick ourselves a nice instrument to analyze from the lists. But none of those lists, let's find maybe in here in the commodities, let's go with maybe agriculture and maybe corn, which has a signal, or coffee. Let's see how coffee looks like. Okay, let's expand the chart. Get rid of that for now. Okay, let's maybe make it daily or weekly just to have a better point of view. Okay. Actually, let's keep it at days because yeah, let's keep it for now. Let's keep it for now. Okay, great. So before we will begin, there is a question here. How can I arrange the platform the way that you are working? You are working with WebTrader 6 and I work with WebTrader 9. What you have to do, and this is again, I'm assuming that this is the fastest solution, is to ask your senior account manager to apply the previous version if it's possible. Again, I'm not technical enough to tell you how it's been done, but you can either try that or try the customer service and ask them to replace. Okay, I hope it will provide you with a brief solution. Now, as we can see here, the reason that I stayed on coffee, I don't know if you guys have noticed the beautiful resemblance that we are having here. Okay, and the way that we are going to begin is first to have an idea where the market is heading. If we can somehow take advantage of the structure we're having now, and potentially composing a position with some kind of logic. How much we can make, how much we can lose, what's the length that we're expecting to pass, and if it's realistic or not, and where it's putting us in terms of using our money. All right. So this seems like a buy scenario at first sight. I also think that the last time that it's been this high was mid-COVID, when there was a serious shortage. Let's quickly, guys, before we actually begin, I would like to confirm that. Yeah. Okay, you guys can see that, right? Hope you guys can see that. All right, so we can understand from that coffee is considerably high. Okay, and just like anything else in the world, if there is no force to stop it, we can assume it has potential to carry on going up, even though it got rejected a few times, but still we can assume that. All right, now from here, what we can do, let's first have a guide through about the part here at the top. I'm a beginner. There is just, I'm reading you guys the comment and the questions we're receiving, so also I can provide an answer and I can carry on. Please, there is an online course for this online trading or material. Again, for more. What I would recommend, Mr. Aminu Mustafa, is to go to here. As you can see, there is a play button here. If you click in here and go tutorials, it's going to open a nice library with a lot of videos that you can go through and educate yourself. I hope it helps. And now, if we would like to focus on composing the position here, the first thing that we would like to do is get more familiar with the chart and see how we can utilize the button presented here at the top of the chart. So as we can see here, we have the search field. I searched coffee manually because I was looking for inspiration. But if I would want it, I could simply go coffee and open coffee. The reason I was looking for gold is to show you guys the next thing that I wanted to show you. If I'm on one instrument and I've chosen another instrument, which can often happen, right? I have to make sure to click sell or buy to have this sidebar with the correct instrument. Otherwise, we're still looking at coffee on this interface, but the chart presenting gold. Now, if I click here buy or sell, let's go with the buy. It resets that sides, and now I have gold, and I'm presenting gold as well. So if we go back to coffee real quick, putting coffee, clicking on coffee, as you can see, it's still here on gold, so we're going to click buy. All right. Then I can keep going to the right. In here, we've already saw that on the signal section. We have the days, minutes, hours, and weeks. If I keep going to the right, in here we have the candlesticks, bars, or line. And we've already understood in the past many times that the lines, if I go with the lines and not with a candle, this big boy here is something that I'm going to miss. As you can see here, if I go with the line, it doesn't exist anymore, and I might miss the very crucial resistance that might help me with my analysis. So let's go back to the candlesticks. As you can see here, also we could have missed the tail here, but everybody can analyze whatever way they want, maybe bars. Okay, if I keep going to the right, what is the importance of the two oval? That's a very nice question. I'm surprised that you're the only one asking me, Mr. Abib. I want you to have a careful look on the two ovals, and I want you to tell me what they share in common. what those two ovals share in common. Let me expand that a little bit. There we go. Okay, what do you think, guys, that those two ovals are sharing in common? Okay, and I'm gonna get to that, I promise you. I didn't just mark that to keep it as a mystery. Okay, let's keep going to the right. In here, we have here the crosshair. If I click it, it enables the numbers. If I click here, I can change the layout, two assets at the same time. If I would like to change the other instruments, I can click it, can search it, and I can change it very, very easily. In here, I can apply an indicator. Super, super simple to do it this way. All right, now with coffee, and I'm thinking maybe coffee can keep going up, and I understand that in here we have something called resistance, okay, and in here we have something called support, and another support, and another support, and closer support. Now let's, maybe we don't have to use the other one as well. Okay, and let's assume coffee can really go up. So we're gonna get rid of everything written here and simply place coffee and assume that this is a buy scenario. Okay, and assume that this is a buy scenario. Then our price is 2675. Okay, and we are going to also have two target price, target price, target price. Okay, and the outcome. All right. I am very, very sorry that you don't see this platform. As I said before, it's really unfortunate, but I technically have nothing to help you with right now. You have to either contact customer service or your account manager to apply this platform on your platform. I really have no way to help you now, unfortunately. So as we saw coffee now, potentially expecting for a buy. Let's suppose that I do take a buy here. I click buy, it goes up a little. Okay, then I can make a little bit of profits. The problem is, I don't know a few things. I don't know the most basic thing that I should know. Okay, how much can I gain? Or how much can I lose? Or how much money am I using for this position, right? Furthermore, what price do I need coffee to get to know that I can make enough money from this position, right? So the best place to begin is first to set a certain target. If I have a target, let's suppose my target in this case is going to be $500. I know, okay, if I click here buy and it goes high enough, and I go here to the positions and I see that I'm making 500, I close the position, no problem. Okay, so this is a great place to begin with. I have a certain target, at least I know when to close the position. All right, the second thing that I would like to have is the time length, which also helps me determine the trading style that I'm using. If I'm a very busy person and I can trade every day, the duration for this position allows me to manage my time around that, and I can basically trade according to my plan. Meaning, if I only want to trade once a week, I can have this position weekly position. If I'm planning to trade once a day, I can have it one day. If I'm planning to hold it for 3 hours, obviously 3 hours. And you guys really understand the point from what I'm doing here, keeping it simple and basically allowing me to, you will see later on, but to use the same system for the rest of my positions as well. Let's call it 1 week for now. Now in the movement, what this factor here allows me to do is to potentially examine the price that I'm expecting for it, compare it with the time length that I'm expecting to hold this position. In other words, if let's suppose right now I aim to coffee to get to 285, okay, and I'm expecting it to happen in a week. So what I can do is I can go back to weekly candles. As you saw, I switched from days to weeks. And now I can see that on weeks, it might get there if I'm comparing the size of the previous week. Okay, but in terms of analysis, because this is an all-time high, we have no reference of when was the last time that it was at 285, if it will ever get there, right? Now, potentially keeping this in mind, I would also like to have some measurement. How frequent, how much can coffee possibly move in a week on average? So for that, what I can do is one of few things. One thing is, of course, I can look at the candle here and I can see, okay, the measurements for this candle, it's presented here at the top left, right? Are, let's see, open, close, high and lows. The open here is, we're just going to quickly jot down the numbers, right? Just a second. So the open here is 258, close is 252, high is 271, and low is 247, right? We can be precise and have what's after the decimal, but it's not crucial, so we can just carry on with ease for the moment. 258 minus 252 is 6. 271 minus 241 is roughly 34, but or 24, let's do it with a calculator. $24, okay. Nice. So now I have a minimum and a maximum number to think about, expecting coffee to range between this 6 to 24. The major problem with this is the shape and the size of this candle compared to other candles seems quite unique. As you can see, the size of this candle and its fluctuations doesn't look like that one. Okay, in other words, what I'm telling you guys is this primitive technique of putting those numbers down doesn't really imply any average. Okay, to have an average, we have to include more candles, more intervals. We have to include that guy and this guy and that guy. Once we have a bunch, we can then take the numbers, divide them, and cut down average. The problem with this method is that it takes a lot of time and it's not easy to perform, okay, for beginners, but you can practice and do that, or you can add an indicator that does this automatically for you. This indicator is called average true range. Let's click here on average, on type to filter, AVE for average true range. We click and drag it to the right. And then in the length, we can choose how many weeks it goes backward. In this case, let's take only a month and 1 week. And let's maybe change the color to see it a bit more clearly. And now we see that coffee has tendency to move almost $20 per week. So expecting it to get to 285 from 270, 267 is not really far-fetched. Again, if I'm adding analysis, fundamentals, and the fact that it's never been this high, of course, it might contradict the analysis that the ATR is giving us, the measurement that the ATR is giving us. But if I'm going bluntly with the numbers and the average, and it goes straight up, 19.3, it can definitely get there. Now, I'm not relying on the ATR in this case, I just have it as a reference. So what I can do is I can expand the chart back, go up a little bit, and aim for a more realistic number, to my opinion, which in this case will be from 267, let's say, to 70, okay, which is $3 up, maybe even 2.5. Let's go with 2.5, right? Okay, so in this case, let's bound the price here to be pinned so it doesn't move around all the time. So let's make it 267, right? So 267 plus 2.5 is going to be 2.6. Okay, and in here we're going to do the same. We're going to click here on stop loss and reduce 2.5 from the current price, which will be, okay, are we with a, oh, we are with a sell. This is why it's the other way around. Okay, we're going to twist that. Okay, and again we're going to put the numbers, very, very simple. 267. Okay, now 269.5, which is $2.5 more. And in here, 264.5. Okay. Now, because this is let's also place the ATR here, just because we already have it. Where did the 2.5? So as I'll clarify, not only for you, Garrett, I'll clarify for everybody here as well. If this would have been an ordinary scenario, and this 20 would have been in a range backed up by statistics, right? A price that it reached, a reason that it reached there, something fundamental, then of course I could go with the ATR and expect it to go up $20. The reason that I choose 2.5 instead of the ATR is because, as you can see, to get to that level, it needs to break another resistance, and it needs to go up to a level that it's never been there before. So that means that to go with the ATR, in this particular case with coffee after all times high, I would probably look for a very, very good reason. Okay, are we seeing this, guys? I hope that my message goes through. Of course, I can go with oh, I switched to month. As you guys see, the ATR has changed. It was 20, it was 19, now it's 33. Why? Because now it's months, and in months we have few weeks. If we go back 2 weeks, it's 19. All right, so according to that, I took consideration support and resistance, and $19 upwards seems imaginary. Okay, at least for me, with what I'm seeing now. Might be complicated for people to understand, and that's completely fine. So by the ATR, I'm putting here, just a second, actual. Okay, based on support and resistance. Now, the units in here, it's very, very simple to figure that out. All we have to do is target divided by movements, and then equals units. In this case, 500 divided by 2.5. Who can tell me the answer, guys? And in the meantime, we are going to place here quickly the new numbers. Let's take the buy price, place it down here. Guys, let's see who is sharp. How much is 500 divided by 2.5, right? There we go. First answer goes to Gareth. Who else? Dina, very good. Sean, very good. You guys are amazing. Really amazing. So obviously whoever wrote 200 was right. Let's just confirm it for the audience, for the people who didn't do this calculation yet. Very, very nice. Let's put it to the test. See if it works. All right, so in here we're simply going to change the 100 to 200, and of course matches perfectly. We can lose or gain 500 just as much. But a problem here now is that we can lose or gain the same amount, which might not be optimal for people who are looking for a higher R&R ratio, risk-reward ratio. So let's suppose we would like to maintain the 500 as profits, but we would like to minimize the 5%, to 2%, right? So in this case, how do we make it 2.5%? So as I've explained in the beginning, the closer I get my take profit to the entry, the less I can potentially lose, right? Meaning, if my stop loss is roughly here, I'm changing it just for a minute, guys, just so you guys can see, right? So if I'm changing the length between my entry to my stop loss, if I'm getting it closer to the entry, I'm actually minimizing my loss, right? And that means that I can push it higher, and this way I'm basically minimizing my loss up to a point that I can choose, which in this case can be a 2.5% and not 5%. Now you're probably wondering, Danny, how did you get to 5% or 2% or any of that? So for that, we have a very nice equation to give you, which is super simple to use and universal. Just a second, 65, very good. All right. This equation is all right, so to know the exposure of your position, you have to just go potential loss divided by balance equals X, and then X times 100 equals exposure. Meaning if I will go 500 divided by 10,000, which is my balance, as you can see here, which is equals X, then it shows me 5%, so that means 500 divided by 10,000 equals 0.5, and 0.5 times 100 equals 5%. So guys, unfortunately, we are out of time. I hope this has been helpful. You can obviously rewatch the webinar if you want. I understand it might have been a little more this part was a bit faster than usual because in the beginning we had to delay on the economic calendar and the signal, but believe me, those tools are really great tools, and I had to show you that for you to enjoy later on and assist you with your analysis. I hope everybody has learned something. Best of luck with your trading. You're all welcome to the live Q&A tomorrow. That's it. Have a fruitful week and have a good day.